sub-second finality times, and that's absolutely critical if you want to support thousands, maybe more AI agents all transacting at once without clogging the network.
Got it. It's like an elastic cloud, but for a blockchain.
Yeah.
And the sources also mention it's developer-friendly. That seems important for adoption.
Very much so. Developers can build using languages they likely already know, like Rust and AssemblyScript.
Which are pretty standard for performance-critical stuff.
Right, so by supporting them, Near lowers that barrier to entry quite a bit. It encourages developers to build sophisticated apps quickly.
Okay, shifting gears slightly from the internal tech to, let's call it, external market structure. We just passed a huge milestone on the token side, something long-term investors really need to notice.
Yes, the token supply.
The initial token supply is now almost 100% fully unlocked. Walk us through why that matters so much. For someone not tracking vesting schedules day to day, why is finishing this 4 to 5 year unlock period such a big deal for stability?
Because it removes a huge question mark, a kind of overhang that's been there for years.
Okay.
Every time the price started to climb, there was this looming risk in the background. Early investors, VCs, the team, they had large chunks of tokens scheduled to unlock periodically.
Creating potential sell pressure.
Exactly. Sudden supply shocks that could just kill momentum.
No.
Now that we're at basically 100% unlock, that guaranteed future sell pressure, it's effectively gone. The supply is predictable now. Investors really value that.
Predictability rate.
And this internal stabilization, it's happening just as the wider macro picture might be turning more favorable for digital assets generally.
What do you mean the Fed?
Yeah, we saw the anticipation and then the actual confirmation of a Fed rate cut, that 0.25% cut on September 17th.
Which theoretically increases liquidity and encourages more risk-on behavior. Money looking for yield.
Precisely. And maybe the most striking number supporting that idea of future capital flows. You look at the money sitting on the sidelines.
In money market funds.
Yeah, a record $7.6 trillion held in money market funds. As rates potentially drop, the yield on those safe havens falls, and suddenly that enormous pool of capital starts looking for better returns. Digital assets become more attractive.
So, okay, we've got internal token stability, potential external liquidity coming in, and this unique tech stack aimed at AI. Now, this is where it gets really interesting for traders. The charts seem to suggest all this pressure is building towards something big. What's the price action been telling us?
Well, the charts really paint a picture of sustained quiet accumulation. Since March, so for about 8 months, Near has been trading in a pretty tight range, basically between $1.80 and $3.37.
That's a long time to go sideways.
It is. And during that consolidation, it formed a pattern technical analysts get quite excited about, a symmetrical triangle.
Okay, for those of us not staring at charts all day, what does a symmetrical triangle actually signal, fundamentally?
It signals coiling energy, basically, brewing volatility. You see higher lows, meaning buyers are stepping in a bit earlier each time.
Okay.
But you also see lower highs, meaning sellers are taking profits a bit sooner. It's this compression, supply, and demand squeezing tighter and tighter, like winding up a spring.
And when it breaks?
The move that follows is often pretty strong and sustained.